Hey guys, welcome back. Glacier Path here. So right now I'm doing a video live. The market hasn't closed yet, closing about 20-30 minutes. I just want to show you a very simple look of what I'm looking at. Just a small tidbit of the many indicators, technical analysis, volume price analysis that I do. But basically when we came down with that debt to equity announcement, we started our first range. Okay, we had the failed breakout right here at supply, and then we came back to demand and failed and started a new range. Now, part of me thought, okay, this new range could be the pattern where we sort of double bottom, which we did, and that we would shoot up. Well, we haven't gotten that yet. And that doesn't mean it can't happen. As you can see, this white path could still pump up here and create this pattern where we're exiting this huge accumulation here, right? But with yesterday's pump up and today's pump down, right now you're failing supply for a third time here. And that's not to say it is 100% going to go down to this new final low, in my opinion, but I think the odds are maybe about 60-70% right now. Now, if Monday we have a reversal bar, like let's say Monday we come down to the very bottom again at like 1780 and then we just like pop really hard, then yeah, I think we're done, right? Done with this accumulation. But one thing I want to note here is the VWAP period, that 35 trading day period, ends, I believe, on the 22nd or the 23rd of September, marked on this vertical line here. So if we do come down to a new lower leg, let's say the market starts to get really violent, sell off, then there's a potential that we have our bottom here, maybe around $16.50 to $17. Now, if you remember, my ultimate call is $15 to $18 would be the bottom, and I'm 100% confident that this is the bottom phase. It's just timing a bottom is tricky. And so if you take this trend line from this first failure of supply to the second failure of supply potentially, and you go to the bottom zone here, you have a potential breakout around that 22nd, 23rd date, which is when that, debt to equity completes. So that's all we're looking at here. When you're trying to time a bottom, you got to be very careful with capital and exercise capital preservation tactics. So, doing things like weeklies is extremely risky. Even bi-weekly options as well as monthly options. If you go, a month and a half, 2 months out here, it's looking that you might have some success here because ultimately what you're looking at is sort of a September markup and then an October markup if we go into the lower leg. And I'm inclined to believe that's what's happening right now. In fact, if you see at the end of the day today in the last 20 minutes a kind of deeper push to the bottom here, then that opens up Monday where you could gap down or just have a huge red candle with a Monday sell-off with the market. So I'm not going to show AMC. AMC is a little bit more complicated at the moment, and if you want to see those charts, we've had a huge response in the Discord, a lot of new members. So get in the Discord and check out the charts, check out the new updates, because the thing about the way that I handle these stocks is I tend to be pretty conservative in a sense of, hey, if we're not seeing this track in the way that I like it, and it's not tracking the path, it's not, the indicators aren't setting up in the same way that I want them to, then we usually cut bait pretty early, because you want to preserve capital in this situation. Because once you catch the bottom of this, it's a fun ride, right? But timing the bottom is extremely frustrating and it can be very difficult. So is this range here 100% done and we're going to a lower leg? No. but I'm leaning towards that. If Monday, Tuesday you have a huge, massive push in volume, a surge out of this range, then yeah. So I'll see you guys in the Discord. It's still $25 a month until Sunday, and then all of the prices are increasing after that. Okay, guys? I will talk to you soon.